is just the right time to get in. Uh, uh, Somebody who looks at slightly longer term conversations as well. Chandraprakash Padiyar, Senior Fund Manager at Tata Mutual Fund, joins in with his thoughts on how to approach the current scenario. Chandraprakash, great having you. Thanks so much for taking the time out. Hope all is well. Um, the fears of last week abating have gotten a bit of a further leg up by virtue of what's happened in the US overnight with regards to inflation data. Is this conducive for a long-term investor to put in money to work if she or he was sitting on the sidelines?
So, hi, good morning. Well, long term always is reasonable and positive from an India perspective. Having said this, I would want to probably highlight that given the pace of returns that investors have made over the last 3 years, back to back, it does look like, and where valuations are, when the earnings outlook is quite positive and steady, it does look like that investors need to prepare themselves for lower than normal returns for the next, maybe the next 12, 24 months. But to your question, I think yes, long term certainly does look positive, and the trajectory certainly looks positive.
Chandraprakash, is this, do you reckon that for emerging markets, they might latch on to the narrative of lower yields, possibly lower DXY strength, and that being conducive for markets? Whether or not Jerome Powell goes ahead and cuts rates is secondary. But the market belief that that might happen might just egg all EMs, including India, higher as a bucket?
Well, Neeraj, if you notice, it is a global rally. It
Yes,
is not only an India rally,
exactly.
and it is all flow driven in that sense. Because if you look at generally across the world, earning growth is in mid low single digits or below single digits. That sense, barring India. So in that sense, it is not an earnings driven rally across the world. India is the exception, maybe in that case. So yes, investors are positioning for, as of now, as we speak, for lower inflation, stroke lower interest rates. I do hope that there are no disappointments on that count. Fundamentally, though, looking at India specifically, India, there is one thing that I must highlight on India as well, which is that earlier, over the last 2, 3 years, every quarter, every year, Indian corporates outperformed expectations from investors. So their earnings delivery was better than expected. I think we've already reached that phase where one, earning growth is not going to be as strong as what it was in the last 2, 3 years, given the base effect. And two, expectations are running reasonably well now. I don't think there is scope for too much of positive surprise in India as well. And which is why I was saying in my earlier remarks that logically it looks like a period where we've entered, where given the valuation where we are, uh, 1 or 2 months of rally if interest rates were to get cut. But I think investors should expect low returns going ahead.
Right. Investors should expect low returns going ahead. Uh, it's also Samina joining in, Chandraprakash, and I want to talk to you about earnings. Have you spotted any opportunities among sectors, especially after recent corporate earnings? And also, did the March quarter earnings meet your expectations?
So yeah, so to that extent, so this market is all about stock selection now. It is no more about sector selection or top-down approach, more a bottom-up market. And to that extent, I think yes, opportunities are there in all kinds of markets, and we've been able to identify quite a few of them. Having said this, I again come to a similar point: is that in 18, 19, 20, whenever we used to buy a business, new business in our portfolio, the risk reward used to look like 3x is to 1, or two, at least 2 to 3x is to 1, whereas where downsides looked lower and upsides were far, far higher. Uh, Sitting today, when we buy a new idea, when we look for a new idea, yes, there are pockets of opportunities available, but the reward is no more 3 is to 1. I think it is 1.5 is to 1, or maybe 1 is to 1. So that's the nature of the market today. But having said this, are there businesses available which are growing at a fast pace? Certainly, yes. There are quite a few of them across market cap, large cap, mid cap, small cap. But the only complaint that we have is that valuations have moved materially higher across. So you have to be even more diligent when you buy or sell something in your portfolio.
Right. Everything looks expensive, but I mean, India's always been an expensive market, one could argue. I want to quickly get a view on exposure to rural play. We are cognizant of a forecast of a normal monsoon, and I believe a lot of analysts, brokerages have gradually been reducing their underweight stance on the agrarian play. How do you feel about rural play? Is that a space you feel like there could be some value in and could be a good sector to bet on for the next couple of quarters or for FY25 at least?
So when we talk about rural, what has been missing in our markets for the last couple of years is B2C, which is consumer-facing branded companies. These are companies which have been showing lower volume growth a quarter. And these are the companies which have now started saying in the market that they are seeing rural growing slightly higher than urban. Having said this, growth is continuing to be low single digits on an overall basis. So yes, monsoon will be important, I think. Agri commodity prices are slightly starting to move higher globally. So that will be a tailwind for the agri sector, and hence probably income levels will go up in the agri side, and that could lead to higher demand. So we are, and the last thing is the way government infrastructure capex has been going up over the last years. The final impact, or it will percolate down to the rural segment, and that should hopefully um, lead to higher growth going forward. So we are also hopeful, keeping our fingers crossed. As of now, growth continues to be on the lower side, and which is now starting to get reflected in consumer valuations as well. So, on the one hand, you see capital goods industrial stocks zooming almost every day nowadays, valuations going to very high levels. On the other hand, B2C companies, valuations are either normal or going towards below normal in some cases. So if earnings were to pick up, I think that's where you may see surprises.
You know, since we're calling this the election trade, Chandraprakash, hi, Tamanna here. I must ask you a question of whether you have any kind of doubts, positioning ahead of June 4th, or is it just a blip in the larger picture in your view? How are you looking at this event?
Hi, Tamanna. So as Neeraj was saying, we are more long-term investors. So it's these events, we don't play for such events in our portfolio. Having said this, we believe that the economic outlook cyclically, from a trade perspective or real estate perspective, and structurally, which is manufacturing and other stories, continues to be on a strong trajectory. Means that if at all there is a sharp knee-jerk reaction on any untoward result on election day, or let's say next 1 month, we would use that as an opportunity to add into our portfolio rather than being negative on that.
Okay, so let me understand this. So even if there is an adverse result, adverse in perspective to what the market is expecting, you don't think it changes the long-term picture?
It doesn't. It doesn't.
Okay. All right. So that's fairly clear. Thank you so much for speaking with us.